Welcome back to the daily Crypto Roundup, the show that keeps you plugged into everything happening across the crypto markets every single day. And today we've got a really interesting blend of price action, on-chain activity, institutional signals, regulatory pressure, and some surprising under-the-radar moves that could end up shaping sentiment heading into December. Before we get started, a massive thank you to everyone who continues to rate the show 5 stars. The support over the last week has been genuinely unreal. Remember, we're now running the Friday XRP giveaway, where one listener wins 10 XRP for the comment of the week, and another wins 5 XRP at random. We'll reply directly to your comment to get the address you want it sent to. And we're now only around 80 ratings away from unlocking the next 50 XRP prize as well, so if you haven't rated the show yet, now is a perfect time. Now let's get into today's stories, because there's a lot happening. The first thing to touch on is Bitcoin's attempt to stabilize. After one of the roughest months of the year, where the market wiped out over $1 trillion in value from the highs, we finally saw BTC reclaim the $91,000 area thanks to fresh buying and a noticeable improvement in confidence. It's not an explosive recovery, but the tone has definitely changed compared to the panic we saw just a week ago. Analysts are still split. Some believe this is the early stage of a base forming, while others think we need to see stronger liquidity before calling anything a bottom. But what's interesting is that the market doesn't feel as heavy as it did during the sell-off. That alone is a positive shift. And that brings us straight into the second big story, a broader recap of what's been happening across the crypto market. November was brutal. People forget just how sharp the correction was. Death crosses on multiple charts, ETF inflows drying up, whale selling on Ethereum, and altcoins across the board losing key support levels. Some analysts are even pointing out that Dogecoin-related ETFs saw inflows plunge around 80% month over month, which shows just how quickly speculative interest can disappear when macro conditions aren't supportive. None of this means the cycle is over, but it does show how fragile things remain. We're still in a market driven more by caution than aggression. But while the surface looks quiet, what's happening underneath is far more interesting. Smart money wallets have been quietly accumulating smaller, lesser-known tokens this week. Names like MORPHO, REKT, YB, SHFL, and ONYC have all shown noticeable inflows from wallets that typically only move when they see some sort of asymmetric upside. Inflows into MORPHO alone hit around $900,000 this week. That doesn't mean these tokens are guaranteed winners, far from it. But it does mean parts of the market are waking up again even as retail stays scared. And if you've been listening to this show for a while, you'll know that these quiet accumulation phases often matter more than the headline price swings. Now, let's zoom out to the institutional side, because Reuters dropped one of the more important stories of the week. Shares of crypto-treasury firms, the companies that hold crypto on their balance sheet in the same way MicroStrategy does, have come under serious pressure recently. Some are even trading below the value of the coins they hold. That's a big deal. It shows that risk appetite isn't just low in the crypto market. It's low in equities that are tied to crypto exposure as well. The market is effectively saying, we don't trust you to handle this volatility. If these companies continue to struggle, don't be surprised if we start hearing about restructuring, capital raises, or even forced selling down the line. And speaking of forced situations, the next story is all about key price levels. According to several analysts, Bitcoin needs to close back above $93,000 for the bullish structure to stay intact. If it doesn't, some are warning that the cycle momentum could break down more sharply than people expect. We covered something similar earlier in the week. Liquidity, leverage, and macro all matter far more at these levels. The market is fragile, and this warning aligns perfectly with what we've been saying on the show for weeks. The highs we saw earlier in the year won't hold unless buyers step up at the right line. The next few days will be important. Now let's get into the security story that's been dominating headlines today, because this one is serious. Upbit, one of South Korea's biggest and most trusted crypto exchanges, has confirmed that roughly $30 million worth of assets were drained in a coordinated hack. And what makes this story even more explosive is the timing. The breach was discovered just hours after one of South Korea's largest tech companies announced a $10 billion acquisition of Upbit's parent firm. So you've got a major corporate deal in motion, regulators watching closely, markets already unstable, and then suddenly a multi-million-dollar exploit hits out of nowhere. Investigators are now saying the attack has all the hallmarks of a Lazarus Group operation. The same North Korean state-linked hackers behind the Ronin Bridge exploit, Horizon Bridge, and multiple high-profile DeFi attacks. Whenever volatility spikes, Lazarus tends to become more active, and this fits their pattern perfectly. A precise window, a major exchange, and a large transfer executed before security teams could react. It's a harsh reminder that no matter how much the industry matures, security remains one of crypto's biggest vulnerabilities. And with regulators already calling for emergency reviews in Korea, this is a story we'll be hearing a lot more about in the days ahead. We are going to take a short break here. Stay with us.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
But let's keep going, because the next story ties into that bigger theme. Across global markets, equities, commodities, and crypto, the signals are mixed. Some sectors are showing life, but the overall risk environment is still sensitive. Analysts are saying the same thing across multiple platforms. Risk assets want to move, but they don't have permission yet. Crypto has been behaving like a high-beta macro asset for most of the year. So if global liquidity improves, it could bounce fast. But until that happens, we're stuck in this careful sideways posture. Not bearish, not bullish, just waiting. Now here's something a bit more on the speculative side. There's been a flood of new token launches and pre-sales being pushed across social media and crypto channels, and some are being labeled the next wave. Anytime the market slows down, speculative projects rush in with promises of huge upside and early access. They're high-risk, high-reward plays, and normally we'd ignore these. But what's interesting is they're attracting attention, while the bigger caps still look shaky. That tells you there's still appetite for risk, just not in the places you'd expect it. The user base that likes to gamble is still gambling. One thing we've been keeping a close eye on this week is the growing stablecoin accumulation on Binance. And over the last few days, that trend has gone from interesting to impossible to ignore. On-chain trackers have now identified more than $1 billion worth of fresh stablecoins moving into Binance-controlled wallets, with the majority of the inflows happening in several sharp waves rather than a gradual buildup. That kind of movement usually isn't random, and Binance doesn't just sit on that much dry powder unless something is being lined up behind the scenes. What's interesting is the timing. These inflows have been happening during one of the slowest, most uncertain patches of price action we've seen in months. Liquidity is thin, sentiment is fragile, and yet Binance is quietly loading the shelves with more stablecoins than they've held at any point since midsummer. Historically, when exchanges accumulate aggressively like this, it often signals preparation for a volatility event, either expected demand, institutional flow rotation, or a major liquidity injection that hasn't been publicized yet. Nothing is guaranteed, but every time Binance builds a war chest this quickly, the market tends to move shortly after. Now let's switch gears for a moment, because this next one is important. 5 major predictions from analysts about what's coming in 2026. Some believe next year will be the true inflection point for crypto. Not because of hype, but because of structural shifts. They point to ETF approvals broadening, liquidity conditions easing as rate cuts return, institutional portfolios leaning deeper into digital assets, and a regulatory environment that's gradually becoming more predictable. None of this is guaranteed, but the long-term signals suggest the groundwork is being laid for a cycle expansion, not a contraction. If 2025 is the shakeout, 2026 could be the reset. Before we go further, we're going to take a quick break. Stay with us, because there's more to get into, including a major security story and early signs of a recovery in overlooked corners of the market. Now, let's get into the security issue making headlines. The South Korean exchange Upbit has reported a $30 million theft, with hackers draining funds just hours after one of the country's largest tech companies announced a $10 billion acquisition of Upbit's parent firm. It's messy, and it's timely. Whenever crypto markets get shaky, hacks tend to spike. It's a reminder that security is still one of the industry's biggest vulnerabilities. The timing also couldn't be worse. Big deals, regulatory pressure, market weakness, and then a breach. You'll definitely hear more about this story in the coming days. And now, 3 more important stories you need to know about from today. First, Russian investors have been pouring huge amounts into Bitcoin and Ethereum funds this month, marking one of the biggest regional inflow surges of the year. Analysts say geopolitical tension, capital restrictions, and currency instability are pushing wealth into crypto exposure as a hedge. Historically, regional inflow spikes like this have often preceded wider global interest, so it's a trend worth watching. Second, Hyperliquid's ecosystem saw a major token unlock this week, around $60 million worth, and that fresh supply has added real volatility across several derivatives markets. The unlock triggered a spike in open interest, and some analysts are warning that we could see spillover volatility into Bitcoin and Ethereum as leveraged traders try to rebalance. It's another reminder that mid-tier protocols can still influence macro conditions when markets are fragile. And third, ETF markets showed an unusual split this week. Spot Bitcoin and Ethereum ETFs continue attracting inflows, suggesting that institutional buyers are quietly accumulating through regulated vehicles. But Dogecoin ETF inflows collapsed by more than 80%. Institutions are sticking to the majors, while speculative ETF products are being abandoned. Historically, this kind of divergence has signaled a rotation toward large-cap stability. And finally, we end with something a bit different, but it ties everything together. Over the weekend, several analysts pointed out that smaller assets may be preparing to outperform as the market rotates. People always look at Bitcoin first, but historically, when BTC stabilizes after a big flush-out, liquidity starts drifting into areas that were previously ignored. Combine that with those smart money inflows into smaller tokens we discussed earlier, and you start to see the outlines of a potential rotation. It's not confirmed, it's not strong, but the early signals are there. Make sure you're following the show so you don't miss tomorrow's update. Keep the 5-star ratings coming, drop your comments below to be entered into the Friday giveaways, and as always, we'll see you at the top.